for oil companies.
OK, let's talk about another company which is reporting today.
Yes.
Cable and Wireless Communications. Now, this is the result of a four-way merger. Let's just get clear what's in this group.
Yes, this is a cable TV company and also has old Mercury Communications in it. It's not to be confused with what effectively is still its parent company, Cable and Wireless, which has got the big stake in Hong Kong Telecom. They're one of the few profitable cable companies. They've got quite a go-ahead Chief Executive, Graham Wallace. They're expected to make about £65 million of profits this year, which is about the same as last time. They have been increasing penetration, and we saw that with Sky's numbers last week. We saw that there is the penetration, in other words, the number of homes passed that are taking cable is growing at a faster rate than had been expected. And that's partly because there's been a lot of consolidation in that industry, and the cable companies are finally waking up to the fact that they have to do some marketing. They used to just think of themselves as telecommunications companies, and now they realise that they have to be a little bit more imaginative if they are to compete with the likes of Sky.
OK, we should just say pre-tax profits are forecast around 65 million, so that's
right.
About flat, isn't it?
That's right, although there are sort of one-off costs for year 2000 of around 10 million in
Millennium
there.
costs.
So, yes.
OK. Digital, that's a big word for cable, isn't it?
Yes, indeed. I mean, and they probably are going to benefit a little bit from the Sky marketing, even though Sky, of course, wants people to take up satellite digital services. There will be a spillover for people like cable because they sell on Sky and they offer Sky services, so you can get it on cable too. OK.
Right, let's move on to another company where there was profits, or they downgraded their profits forecast. I'm not quite sure how to put it, but they basically warned the market there was a profits warning yesterday for this company, Churchill. Stoke-on-Trent Pottery Company. Why is it important?
Well, why is it important? Yeah. Well, because I guess this means it's bad news. It's more bad news for the manufacturing in the Midlands. We've seen they've had a pretty depressing time recently in the potteries in Stoke-on-Trent. We've seen bad news all around for Portmeirion. Wedgwood is cutting jobs as well, and it's not going to do any better. Much better. They say that's the depressing thing. They're doing badly in hotel wear. They're doing badly in retail, and they don't see life getting any better in the near future.
OK. Also, let's just turn briefly to what's happening in the market as a whole. I was just looking at some of the figures. We've seen something like, we're 12% off the high in July, 7% rebound in October for the FTSE. Can it last?
Well, I'm rather bearish. You're right. I mean, 7% in October. Worldwide, there was a rebound of something like 18% in October. The US surprise rate cut really cheered people up. But I would be a little bit cautious. Earnings downgrades are forecast to continue. There will be a slowdown in the UK, so I would stay on the sidelines. I wouldn't rush to invest right away. I think we're going to see better bargains to come.
Margaret, thanks very much indeed. She doesn't mean the Christmas sales, of course. Margaret Doyle there. Now for a look at some of the other business news this morning. Well, the European Union has threatened retaliation if the United States goes ahead with trade